Okay, traders. Now, welcome to the training session. Now, really focusing on preparing for an inflation number, right? And it's not a hugely variant to when we're looking at employment numbers or other bits of data, but you know what? It gets a lot of extra credibility, right? If I just slow down a bit, because you know what? The central banks use inflation as their main gauge for or indicator for raising or changing rates or keeping rates on hold, all these sorts of things, right? So it's probably got more importance than probably all the other numbers. And it's the one thing I think is changing the way inflation is measured, probably needs to be updated, but that's another discussion. All right, so let's just have a look at what and use the UK inflation numbers as a good example here of where things are going. Now, just on that, instead of just isolating UK inflation, we do have UK employment numbers today, right? And this is the sort of little side cousin or stepbrother to the inflation numbers, right? It's important, but probably not as important, right? So if there's any stepchildren here, then sorry, apologies for that analogy, but that's sort of the way it is. The unemployment rate, okay, looking at 4.5%, 3K, employment change with a minus 40K to 33K. Now, these numbers here, we've got a great week for sterling, right? So if you're not trading sterling, that's fine, but just keep an eye on things because sterling against the dollar or sterling against the crosses are definitely going to be active this week. But as we get into the US inflation numbers, I should say, then that's sort of going to ignite all the majors. But so this is going to be the first part of the action this week on sterling, but it leads us into the inflation numbers. Now, whatever happens here, really with these two numbers, we want that's going to be the sort of precursor to what we expect from the inflation numbers coming out. So if they're strong, right, you might get a slightly stronger inflation number, right? And what that does for us probably really cools down the potential here for the Bank of England to be changing rates. At the moment, the derivatives, okay, factoring in like a 63% no change, right, of interest rates. So this is why it becomes very important. First of all, with the employment numbers, but mainly the inflation numbers. Now, and this is one of the reasons why I wanted to go through and prepare you for the inflation numbers, because there's a whole range of different things, right? You got the core numbers here, and then you've got the traditional numbers, then you've got the retail price index there as well. And then you've got this extra one that is popping up globally, right? The CPI services number here as well. I mean, you've got PPI numbers down here as well. There's a whole bunch of inflation numbers coming out. But to me, the main numbers that they'll be looking at are these ones here, right? If I just focus on those ones. Now, the key to this is, and preparing for this is sort of knowing which numbers are the main impact, right? So these ones would be number one. Okay, the core numbers, number two. And then you'd probably go down to the, I'd actually put the services, this new one, the CPI services number three, and then you got the RPI data there as well, right? But this is what the market will react on, the CPI and the month on month and year on year. So it's very starting point is to work out, okay, two things. What are they expected to do with interest rates? Okay, and we've just showed you that, but I'll come back to it. And then what is the expectation for inflation, right? And where is the forward guidance for the central bank on inflation? And now these are the key numbers that we're sort of really focusing on. So when we come to trading the number here, right, you just want to have all the sort of boxes ticked. Now we know, okay, just by looking at the probability distribution here, and don't forget, this is more of a guesstimate. It's not, you wouldn't pin your life on it, that's for sure, but it gives us a very good idea of how the derivatives are set up, swaps, etc. 63% no change, 36.8% or 0.8% for a cut. Now, what does that mean for us with the number? Well, with the actual number itself, if we get like the year on year, month on month, now the target for the Bank of England has been 2%. And we were there sort of last month, but they want to see consistency here. So 2.3% to me is the key number here. Now, if we get a number below that, and in particular around that 2% or below that 2% level, which is the bottom end of the range for that number, then it's going to be, you know what, they will have to, I'd say they'll go into a cutting bias, probably 75% cut, 25% no cut, right? But we can actually sort of gauge that as we go forward. So the potential move here, if we get slightly stronger numbers, sterling will go up a little bit, but not massive, right? There's only like 30% or 35% of the market is expecting a cut. So that section of the market will have to go and buy. But if the number's weaker, that's where the biggest risk is. We'll see a bigger shift in sentiment towards a cut, and that'll see a bigger move to the downside in sterling, right? So these are two key components. Not just knowing what the number is, that's great on its own, but in isolation, it doesn't give you enough information. And that's where that interest rate probability comes in, because this sort of tells us how the market is positioned going into that number. And that's where we can expect the move, right? How big is the move? Well, you know what? As I said, if it's weaker, that segment of the market, 63%, needs to start factoring in a cut, and that sees a bigger move to the downside. If the numbers come out slightly stronger, right, well then 36% of the people or of the market has factored in a cut. They'll have to unwind that, right? Does that make sense? I just want to make sure you guys are on the ball, because this data here enables us to factor in what the impact will be from the interest rate data, right? So really focusing on 2.3 now, and this is where, like, I don't like how over time there's become all the different numbers, right? This services number, etc., because this is the main game. But you know what? If there's variance here in these other ones, well, then it can sort of unsettle things. Now, generally speaking, what I would do in this situation is I look at the main number and I hit the market based off what that is. Then I quickly look and go, okay, what's going on here with the core numbers? Are they in line with that? This services number is a left field one, which I have to keep an eye on. But I will hit and then I will manage, right? So that's just something I've done over a long period of time, because in the banks, you don't have time to sort of think or second guess. If you don't hit it at the time of the release, then you don't hit the market at all generally. So I hit that. And then, you know what, if that's, say it's around 2%, but this one here is higher and this is higher, I'll probably maybe close some of the position out or have a look what's going on. But this is like phase one. The probability stuff is phase two. Now we need to come in and start to think about, well, what's going on with sterling? You just can't go and sell and buy just because, you know, you've got weak or strong numbers. Okay, so there's these three sort of key components, and maybe four. I'll show you one extra one as well. Now, excuse me. So sterling on an hourly basis has been it's been getting a little bit bashed up, but been behaving like an instrument that is ready to start cutting interest rates quite traditionally. Now, some of the other ones aren't doing the same thing, but we have seen, you know what, the US dollar, let's not forget about that. So the US inflation numbers are on the same day, several hours later, six hours later, I think it is, 5.5, 6 hours later. So what we are expecting weaker numbers in the US, and then so you're starting to see sterling go up against the dollar on an hourly basis. You know what? And I think this could be just a bit of a short squeeze, right? The market's been short, drifting sideways, and there does look like there's room to the top side. But what it does set us up for is some levels here to get short if the UK inflation numbers are weaker. So that's where we bring in the daily charts and have a look what's going on there. Well, you know what? It's been sort of hammering away in a big range. And if anything, you'd say this is like a pennant formation or a flag for those traditionalists. And I've left the trend line there. I could draw a new one to that top, but I want to see exactly what's happening on sterling. It's obviously spiked to the top side. Then we've seen sterling come crashing off, and it's sort of about to sort of start to want to go up. Now, how far can it go up? Well, let's have a look at that, because if I just come back across, so the first part, I just don't want to lose our train of thought here. So, right, the first part of the equation is understanding the numbers that we're focusing on, understand what the impact will be, okay, based off the inflation, the interest rate probabilities, okay, that's obviously a key part to it. And then you come in looking for the execution. We know what's going to happen on the numbers, right? But now it comes back down to execution. So that's where I want to sort of do a bit more homework here and try and isolate, if there is a move up or down, which instrument is the best to be trading, right? So that's the, oh yeah, see that breaking news at the top there, Elon Musk. There appears to be a massive DDoS attack on X, working on shutting it down. Wow. Someone doesn't like what's happening there on, I wish they'd just go back to calling it Twitter, but interesting. Now, if you look at sterling here, right? Now, if I sort of just look in isolation here, you can sort of see sterling has been sort of trading sideways. It's popped to the top side back into the range. But there's a bigger story here. When you wind it back, sterling is, you got to sort of think, still going up, right? Okay. So in that situation, what I would be doing at this point is just giving myself some sort of indication. So when I come back to this chart at a later date, I know that wasn't right on the point, but I'll fix that in a sec. So we've sort of understand what we're doing on the fundamentals. This is all about identifying the opportunity here on the technical side of things. Now, if I just wind this out a bit, okay, now we've got a fair way to go between, say, 127.83 up to 130.15. We get stronger inflation numbers. And once again, just coming back to those quickly, looking at this year-on-year number, right? Say for instance, we got something very weird up around 2.7. Well, that's going to really like take off any sort of chance of a interest rate cut from the Bank of England in September, right? So that would create, you know what, there's 38% of respondents here that, or not respondents, like 38 or 36% of the market, 37% would have to go and unwind their cut positions, right? And that would create a move for us aggressively on sterling. Now, looking at sterling on the hourlies, you know, that's a trickier entry point because we don't have any technical levels around. Now, that doesn't mean we can't get in, but it's a little bit tricky. Whereas on that daily, we still had that old resistance line, which is sort of acting more as a pivot point now. This is where I would sort of base my pivot points off, not just horizontal lines. So that's around 127.82. So looking here, we've got levels on the downside. We can identify those, but we've got potential opportunities topside. Now, on top of that, you want to have a quick look around the crosses, right? So let's just go into the daily crosses. Once again, if this was the US CPI numbers, we'd be just looking at the majors. But because I'm focusing on the UK inflation numbers for this training session, we're looking at the sterling crosses. Now, a lot of these charts have been a bit of a basket case, but if you're looking at what's been happening here, right? Euro sterling just drifting down and then smash straight back up, right? There was a big correction there on those, I think it was with the US dollar. Euro sort of just went up and it stayed there, right? It was a massive clean out of euro sterling positions. Sterling CAD, well, generally still going up, right? But it has come back and retouched that trend line. Now, I haven't redrawn that trend line. That was already there. You can see it's just touched or maybe slightly gone through. Sterling Swiss has had a big pullback. Okay. Sterling yen, well, we know all about the carry trade. The carry trade, definitely with the UK inflation numbers, would be back on the radar, right? If they are going into or holding interest rates where they are, well, then you could probably see sterling yen go up a bit. But if they go into a cutting phase, well, then you're going to see a flush out to the downside in sterling yen. And I'll come back to that on the hourly charts. But sterling, it's raced higher against the Aussie and the Kiwi and then sort of just pulled back. So when I look at my charts, and this is where, you look at things, I like to see things stand out like a sore thumb, right? That's where I get excited and I can go, you know what, that's what I want to be looking at. Is there anything here that sort of really overexcites me? Well, not necessarily. I mean, Euro Sterling's had a good run back to the top side, that's for sure. And it's come back a bit. So you know what? Maybe weaker sterling numbers, like a cut, would potentially see sterling yen correct again. Correct a lot of this move from earlier in 24. Might see it back up towards 87. That to me is a possibility. Sterling Aussie, like all these things will move, right? Like if the UK inflation numbers are strong, you'll see a reaction on these crosses. If they're weak, you'll see a reaction, right? So you can be trading anything. What we're trying to do is isolate the pair that has the best, like the really gorgeous setup where it's going to break through a big trend line. That would be nice. And that's in saying that, sterling Kiwi's got like a daily trend line here. It's not a cross I would generally be sort of jumping all over. Sterling CAD, maybe, right? I think the other ones are a fair way off. Although Euro Sterling isn't that far away as well. So potentially those ones would be on my radar. Now, if you guys have questions, by all means jump in, right? So now if I just switch back to the sterling on the hourlies, right? Yeah. No questions? Okay. Let me just keep plowing away here. So I was just having a look at the dailies, right, for the sterling crosses. And there are a couple with some close trend lines pretty close by. But on the hourlies, if you're looking for a short-term trade, then this is where you're probably going to find it. To me, sterling yen, right? I like sterling yen, especially on the hourly charts. If we see like weaker UK inflation numbers, we've got a really good setup here on the hourly charts. Now, I know on the dailies, it's already broken down, so I don't have to sort of go too deep and worry about that, right? We had the big clean out. We've had a nice pullback. To me, it's ready for another big shift to the downside. Weaker US numbers will probably do that for us as well, but the UK gets the first crack. So when I'm looking at the hourly charts, I like the look of sterling yen, big time. Okay, now sterling Kiwi's just been tracking sideways, as has sterling Aussie. There's more volatility in these two pairs, right? This is where you got to start to weigh up and factor in the characteristics of the various crosses. Like Euro Sterling looks like it's primed either side of the market, to be honest. It's sort of sitting there prime time. You got a support level on the downside or a resistance level on the top. So that's something definitely worth focusing on. And there's a lot more liquidity in Euro Sterling than a lot of these other crosses. Sterling CAD mid-range, it's potentially either way, but will be loose as a goose. And I would think Sterling Swiss the same, right? Like Sterling Swiss, if we're weighing up where central banks are with interest rates, like Swiss is like 1.25%. So stronger UK inflation, probably see sterling Swiss go topside, right? And you know what? The Canadian Central Bank, the Bank of Canada, looking to probably cut rates, stronger topside there as well, right? And but I do like sterling yen. That would probably be my pick for definitely weaker numbers. Stronger, I've got a bit of a cross section here. Now, one other thing, just having a look, and you guys, I think most of you guys have got Metastock, right? Just looking at these risk reversals, right? So it's particularly the 1 month versus the 3 month, or just actually seeing what both are doing. So see if there's any major activity here. Now, it's the purple and the blue lines here. Now, that means there's a preference of puts over calls, right? So at the moment, the market doesn't really expect sterling to go up. I mean, there has been a little bit of a correction here in the 3-month, which sort of makes a bit of sense because the Fed are going to be cutting rates, as are a lot of other central banks. And sterling's already sort of like been factoring in these rate cuts. So, but when I look at that, so that tells me if we get stronger numbers, there's a potential, like the market hasn't covered themselves for stronger numbers. So we might get a stronger up move in sterling. Now, there's a reason why the market hasn't factored in stronger numbers, because we've been getting weaker numbers in the UK for some time, right? But this is the left field event. Stronger numbers here tells me that sterling could potentially go up. And with that, okay, the vol here, levels, option vol is a little bit higher, right? So the market, we're trying to sort of look at face value, what's going on. And the last thing I would sort of factor in going into the numbers is just getting an idea of what sterling's doing against all the other crosses, just on a data analytical sort of perspective. And as you can see at the moment, it's a little bit mixed. It's one of those days. As we come in closer to the time of this, so the UK employment numbers, more importantly, the UK inflation numbers, if we see a particular pair that is, say, down considerably or up, right, then you might see an unwind, and you can sort of work out how far it's going to move from how far it's going to unwind from the current sort of status. All right, so that's like, there's a bit of detail there, right? And I mean, I've talked a lot about what to do. So let me just put this together for you in like a 1 or 2 minute sort of synopsis, because this is like, I don't want to like confuse you. I've tried to explain it in detail, but when it comes down to, you can sort of look at the market overall and say, okay, what's going on in the market? Is there any sort of clear defining moves in the dollar? Okay, and there's not. That's good, right? So there's nothing seriously going on across the board. So I can come back to the market and think, well, sterling can do exactly what it needs to do. It's not going to be influenced by anything else. You come into the numbers, right? Prepare mentally for the outcome. Okay, now this is the major number, but we know, right? You got to think of this and say, well, okay, that's the number that we're looking at, and there's the range for that number, and then you've got the month on month. But we do have the core numbers. We do have this services number. The RPI, it hasn't really come into play of late, so I'm not too worried about that. But we want to make sure these numbers are all lining up, all strong or all weak, right? So you get the fundamental perspective. We've got the range here. We know what's going to happen. If it's outside the range, we get an extended move either up or down. Now, with that extended move, we can also factor in how the market is positioned in accordance with the sort of this probability distribution of potential moves, right? 19th of September, cut 36.8, no change, 63.2. So that means if we get weaker numbers, we're going to see a bigger move to the downside, because 63.2% of the market will need to start factoring in a potential cut. But it comes down to how big the variance is, right? If it's down around 2%, I think we're on, right? But if this number comes out, 2.1, 2.2, this is the bottom end of the range here, you're going to get a bit of a shift, and we could end up with a line ball decision going into the Bank of England, and that becomes a big trading event, right? So this will become the big event and diffuse the Bank of England meeting if this number is below 2%, right? It's a big ask, but it can happen, right? And you'll see a clean out to the downside in sterling. So then we come back across and we have a look at where can we sell sterling, right? Now on the hourlies against the dollar, you've got that old resistance line, which is now going to be acting as support. Yeah, that might get a few fans. To me, on a quick look across the board, excuse me, I'd be sort of looking across the crosses And one I could sort of eyeball and think, well, you know what, this we're going to break down here through very short-term support line. That, you know, that's just what it is. But the cloud, bottom of the cloud, and because it also has significance as far as the carry trade with sterling against the yen, right? You might see a bit more of an unwind on that. And that's pretty much where we are with that, right? And as I was saying, just flicking through like some of the detail here, you can get paralysis from analysis. Like these risk reversals, I just look at it and go, okay, market's factoring in puts, okay, they're factoring in the downside, right? Like, but there is a little correction here, and you want to check this over the course of, as we lead into the employment numbers, there may be a quick correction there, and it doesn't take long to get a correction. And you would expect them, well, actually, this is quite obvious. Where would they start buying? Why would they start buying calls, say today? You guys want to answer that one? Why would they start buying sterling calls today? Anyone want to answer that one? Well, I'll tell you, if they actually if the employment numbers are strong, well, then they'll start factoring in a potential higher sterling and maybe stronger UK CPI numbers. And that's where the correction in the market will come from. So what we're trying to do is isolate parts of the market where we know there's exposure. If they're buying puts, right, it means they're expecting the move to the downside. So always expect the unexpected, okay? We know how the market's positioned. We know what the data is and what to expect with that. And then you can come back through and go, yeah, you know what? You find the instrument that you like to be trading. I like sterling yen, but I haven't really pinpointed yet exactly the best trade here for stronger inflation numbers. And that's something, you know what? If the market hasn't covered stronger inflation numbers, it's probably worth a try there. I mean, sterling CAD bouncing off support would be good. You got to think sterling Kiwi off support as well. And well, euro sterling maybe back to the downside. Okay, so that's just a bit of a walkthrough, right? A vivid walkthrough of what you sort of would be doing as far as looking for the numbers, right? It's not just a matter of looking at the number, covering the range, and then finding the pair. We can actually make the trading opportunity a bit better if we know how the market's positioned and what they're sort of factoring in for the next move, 1 month, 3 month on those risk reversals, and also that interest rate probability from the Bank of England. All right. So that's, hopefully I haven't sort of put you to sleep. Any questions there, guys? No?
Brad.
Oh, there you are. Yeah. Richard.
Yeah, Brad. Just wondering what would be your reasoning for not going with the sterling Kiwi on the previous charts there?
Yeah, it's a good question, right? And this actually, funnily enough, this comes back to more historical performance. Like the Kiwi, I've always struggled to make consistent cash out of the Kiwi. And that's just a personal preference of mine. We used to get bashed up on the Kiwi a lot. So I sort of steer away from it. And you know what? I did the same with dollar Swiss after January 15, 2015, but I'm back into the Swiss. Whereas the Kiwi, it's just got the lowest liquidity out of all the developed nations. So it's always a tougher entry. But you know what? It will go, right? And you can see it. And because of that, it will run. But you just got to factor in a bigger, wider trade plan, because the Kiwi liquidity, it's less than the Swiss, put it that way.
I see.
Yeah, so just my personal experience, if anything. I don't want to put you off getting into it. It's just there's bad blood between me and the Kiwi. Put it that way. All right. Any other questions there, Lana, Leonard?
I'm good. Yeah, I don't have any further question.
Okay, I'll run through this anyway as we get closer. Like we'll get through the UK employment today. We'll get into the UK employment inflation numbers tomorrow. I'll do a bit of a nice preview for that, so we can actually isolate this a bit better. And yeah, we'll work out where the best opportunities are on these as we lead into it. Because it's funny enough, when it's a line ball decision, right? Like this, well, it's not quite a line ball decision, 45, 55 on the split here is nicer, but we could be there if we get slightly weaker employment numbers today. I think we're going to be like 45, 55, and that makes the CPI number the interest rate decision, right? That's what you got to understand. If we get the UK employment and the inflation numbers the same, the inflation number is the interest rate decision, not the meeting itself. It'll be already factored in by the time we get there. And that's where it gets really explosive. And, and that's where you can make a lot of money. All right, guys. Well, thanks for
One second. When do you place the order? Like before the number come out or right after?
Yeah,
second.
Good question. I generally, if I'm using a pending order of some sort, right, I like to have some sort of technical level that I can use. So if I was looking at like sterling yen here, right, because I've got time to trade, I would generally trade live. But if I was placing a pending order, I would be posting it, and I would give myself, because it's an inflation number, like 20 points to get in, like 5 seconds before, something like that, like very close to the number. Like obviously not 1 or 2 seconds because it might get lost in transmission. But most of the trades, if I use pending orders and I've got a nice clean setup, they will be applied about 5 seconds, 10 seconds maximum, but generally 5 seconds before the number. I leave it in the market, and then I can see what happens straight away, and then trade after that. So that's more than enough time, because Lana, when you get that last 10 seconds, liquidity can come out of the market and get that volatility. So between 10 seconds and 5 seconds, that will happen, and then you get then it's sort of the price stays where it is generally. It'll be a little bit wider, and then you get the move from there. So it's always, you can have a great outcome sometimes with pending orders, and other times it can be an absolute bloodbath. But my preference is live. Even live though, I would use pending orders occasionally and break up the trade, right? I would put a small order in on, say, the downside, like half the position I'm going to trade. If we get weaker numbers, I'll just put that order there, because if it's really weak, it sort of gaps. And I don't mind getting gapped if I've got an order on, because it means that's where it's going. Then I can assess where the gap is. So if I put an order on here at 186 and I'm gapped like 50 points, well, then I'll probably close the position and look to get in on the retracement. So, but generally, execution-wise, 5 seconds is more than enough to put the orders on.
I see. And after the number comes out, do you ever place any order?
Yeah. Oh, absolutely. Well, it depends on the level of variance, right? So if I was looking at sterling, it depends on the reaction. Now, if don't forget, even with really weak CPI numbers, these things will go down 150 points. So if it goes down like 120 quickly, I'll probably take some of the cash off the table and then look for the retracement. It depends on where the technical levels are. If it's breaking longer term trend lines, well, then I'll let it go. So this is where looking at your daily and your longer term trend lines is important, because if it breaks a longer term trend line and I'm taking some cash here, you're like, you know what, you could be giving up a large move here. So you need to factor that in. But if there's no daily trend lines around and you're just breaking hourly support or resistance trend lines, then you've got to like work out, or say euro sterling here, right? On the hourlies, you look at where the price is, how far it's going to move to get to the support trend line, right? So that's 18. You're looking at 40 points. Okay, so it might have enough momentum to squeeze down through here. This trend line will take a bit of momentum out of it. It then will retrace. So don't be afraid to take some of the cash off the table on the first run, right? The first run is where you'll see the genuine clean out, right? And if there's decent sort of variance, say even on euro sterling, we get weaker numbers. So we get euro sterling going up. You get a big push to the trend line. And if that's got to go up 60 points, I would probably potentially look to sell, lock some in here, look to get in on a retracement, and then also on a break of the trend line. So you've got to be, don't be afraid to take some cash off if you see a big move straight up. Quickly check your daily trend lines. Make sure if it's breaking a daily trend line, because it probably will keep going. But on the hourlies, they have the behavior's a little different, if that makes sense. And it really depends on the market setup, market conditions. There's a lot of different variables. So once you see a lot of opportunities and you see a lot of inflation numbers, you start to get a feel for what's going on. Now, where I would let the trade go, if the numbers come out below 2%, right? Because 63.2% of the market thinks there's no change, that will have to be factored in, and you'll see a significant move to the downside, right? So that's where you would let it go, right? Because if we get a move like 2.1, 2.2, just below the inflation, yeah, it probably moves them a little bit closer to a cut, not as aggressive as a move below 2%. So it depends on like how the market's positioned for the Bank of England, what they're expecting, and also the level of variance here. It has a big factor in how far it moves. And if you do take some cash off the table, I'm saying below 2%, let it go, right? But if it comes out at 2.1 or 2.2, we'll still see sterling come off, but it won't be as aggressive. You might see a bit of a knee jerk, it come back and then go again. And that will give you a chance to get in, take some cash off the table, and then go again on the retracement.
I see. Thank you.
That's okay. There's all these little nuances that you need to, with more time in front of the screens and in front of the numbers, you'll pick up all these little things as you get more experience, right? So, but yeah, keep asking those questions, Lana. That was a good one, because it's like, do you take some of the cash off the table or not? There's a lot of different variables. The smart one is, if you're not sure what's going on and you're happy with what you can see, then take some cash off the table. That's for sure. You can't go wrong making money. But what you will do after that, as you get more experience, is you'll be more prepared and go, if this breaks this level on a daily trend line, well, I've got to stay short, because the move is going to be much bigger, especially if they're unwinding one side of that interest rate probability. All righty. Any more questions there, guys? No? Okay. All right. Well, thanks for joining me. I'll get this video up on the website, and you guys can have another look at it when you want to. I was just going to say, we haven't made any announcements yet, but we'll send out some stuff. You'll find this one in the in part of the masterclass, right? The training session archive right here. So we're trying to there's so many components to this, but it will be good once I explain it all to you. All right, guys, thanks for joining me. Hope you got a lot out of that. If you have more questions, by all means, jump on the Discord and let me know. Okay.
Thanks, Brad.
Thanks,
Thanks,
Brad.
guys. Cheerio.
Thanks.
Thank you.